Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, dollar hits 3-month low after Fed official signals rates may start to fall, as well as that Finland to close all borders with Russia, all land borders with Russia after migrant influx. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, obviously, is the dollar hitting a 3-month low. Now, dollar reached a 3-month low yesterday as investors grew confident the Fed will start cutting interest rates by mid-2024. Now, with the dollar dropping 0.5%, reaching lowest levels since mid-August this year. Now, we've obviously been covering the Fed's kind of monetary policy rhetoric quite extensively most recently, but we've also been, taking a deep look into the dollar on the charts as well, and this has formed quite a strong picture that we've been able to have as an understanding for the dollar and the way the Fed has been shaping their monetary policy. Now, if we take it back 2 months, let's say, there was a brief period where the dollar started to get priced in far higher than other currencies as people expected the Fed to hold rates higher. But as we've seen with recent economic data, we've increasingly seen the inflationary pressure is weakening within the US, with it only being, last month where we did see that drop in inflation below economists' expectations. And whilst we're seeing this around the world, seeing it with the dollar, the biggest, most powerful currency of the world, we obviously see those effects dramatized, and therefore, we are now seeing dollar hit a 3-month low after, 3 months back, 2 months back, as I just said, people were pricing in higher rates for the dollar, possibly, another increase by the end of this year, but this seriously seems extremely unlikely now, and we're likely going to start seeing rates being cut going into mid 2024. Now, the decline began following one of the Fed's most hawkish policymakers, Christopher Waller, signalled that interest rates were unlikely to raise further and would be cut if inflation levels remain low and keep decreasing. Now, we've heard mixed rhetoric from the Fed recently around, them not really wanting to have a look at whether, they need to start cutting rates, with this being this kind of rhetoric generalization for most central banks, I think is fair to say, with most central banks just wanting to focus on the issue at hand, that being inflation, which is still above, all the targets in these major economies, and therefore they want to bring it down to that level before they even start thinking about the possibility of cutting rates. But, as we are nearing that level with that 3.2% figure from the Fed, we are increasingly coming nearer and nearer the point where, the Fed does actually make a decision to, cut rates. And with that inflation figure falling and with this rhetoric turning far more dovish from, the Fed, we're likely to start seeing that rate cut sooner. Now the question is, at what point during mid-2024 will this happen? We were talking before around, maybe July, but, with this sort of rhetoric, we could be seeing rates being cut as early as June, which would have a dramatic effect on markets, of course. As the Bank of England is being priced in for rate cuts to start beginning August of 2024. So obviously that kind of expectation of when rate cuts will start happening will start to be priced in on currency exchanges such as pound dollar, where if people are expecting the dollar to be start having its interest rate cut further and earlier, we're likely to see the pound gain that strength. So this is why it's important to stay on top of this. And this obviously comes after inflation fell to 3.2% last month in comparison with its highs of 9.1% in June of 2022. And this is what we were just talking about. Now, the rhetoric differs from Powell, who said that the Fed was not considering rate cuts at all right now. And obviously, this rhetoric is slightly older than Christopher Waller's rhetoric, but it's interesting to be hearing this, kind of dovish rhetoric from, a well-known hawkish member of the Fed. And if, I think it kind of explains the dramatic effect that we have seen on the dollar following his rhetoric, because we're so used to him being that more hawkish kind of individual, but him saying, we're not looking at raising rates further, and we could be looking at rates being cut mid 2024, sorry. We will start to see the the dollar take an even greater hit, other than if we were to hear this rhetoric from Powell, for example, as we already have. And so this is really interesting to note. Now, the 2-year yield fell 0.09 percentage points to 4.77%, that being the lowest level since mid-August, with the dollar now on course for its worst monthly performance this year, falling 3.6% this November so far. And that's very significant. Think about 3.6% in just a month. This will be very significant and could enable this month to be the worst performing month for the dollar this year, as I've already commented. Now, Waller's comments come in the final days before the Fed does have its last meeting this year, and rates are expected to be held in this meeting. And Waller said, US growth appeared to be moderating, which would support the continued progress on inflation. And this is obviously represented in other sectors of the economy where we can expect slowing US growth. Now, Michelle Bowman, however, made sure to make note that variables such as the strength of consumer spending and supply side factors could keep inflation higher than expected. And this is more akin to the rhetoric that we've been hearing from Jerome Powell, with his kind of increasing stress on the fact that yes, we might be receiving, this more positive economic data in relation to inflation, but at the same time, it's important that we wait. It's important that we see, a long-term period of lower inflation before we start jumping to solutions and conclusions, because ultimately, if, rates start being cut and then suddenly inflation spikes up, this will be very, very detrimental in the way that people then trust the Fed going forward. And so they really want to make sure that inflation's in the right position before anything gets started. But that's all to talk about on this topic. We'll come to the dollar on the charts in a second, so make sure you stay around so you see that. But next, talk about is Finland closing all land borders with Russia after migrant influx. Now, Finland will close all land borders with Russia, and this comes following Helsinki accusing Moscow of deliberately orchestrating a surge in asylum seekers as a part of an influence operation. And this is very significant to know, as these kind of geopolitical issues which we are seeing occur around the world are increasingly creating higher world tensions, as a result pushing gold higher. We're seeing this, of course, in Russia and Ukraine. We're also seeing this now in Israel and Palestine. And with all these events, we've seen gold rise dramatically as a result of it, as people buy up this safe haven asset in times of global crisis. And as we continue to see tensions ramp up, also in the extending conflict of Russia and Ukraine, we're likely to see world tensions increase as well. With this increasing isolationism of Russia in relation to Europe as a whole, will be very damaging to world tensions, and also, push gold higher, which is why it's so important to keep note of these topics. Now, yesterday, an extraordinary cabinet meeting saw Finland announce the last remaining border crossing with Russia, that being Raja Giuseppe in the far north, would close from December 13th, with new information apparently leading Finland to believe Russia was deliberately sending migrants over the border. And this is kind of similar stuff that we've seen from that side of the world before, with Belarus and Poland being a very important, historical topic to note, which is very recent. And, I believe this was taking place before the Russia's invasion into Ukraine, or continuing after that. But, Belarus was sending a wave of asylum seekers to Poland's border to destabilize the border, to take Polish troops and place them there, and it became increasingly violent and dangerous for both sides, with obviously Belarus only benefiting from this, but the asylum seekers and the Polish officials and soldiers being damaged as well, with Helsinki accusing Russia of deliberately attempting to destabilize Finland's national security. And this comes following nearly 1,000 migrants attempted to use the border, up from a few dozen in previous months. Now, this has led to accusations of hybrid warfare, which increases pressure on the country without a direct conflict. And we've been seeing this, greater and greater with Russia and, and even China with, NATO allies, where they don't want to go to direct conflict, as this will cause an all-out war, and therefore they kind of, resort to this hybrid warfare style. Now, Finland had earlier this month already closed its 7 other checkpoints after claiming Moscow could be using the migrant traffic as a cover to smuggle soldiers and criminals. Now, asylum seekers must apply at airports and ports, with cargo, rail traffic also remaining open. So, some methods of transport are still remaining open, but the overwhelming majority and the clear, crossings being fully closed now. So keep your eyes on this as world tensions do rise. But that's all to talk about in the articles. Next to talk about, of course, is the chart, with the US 30 and US indices being the first to note. Now, as we can see here, as we've been talking about going into this week, the US 30 in particular has been slowing in that bullish momentum. Now, we noted this strong area of liquidity and resistance, which, came in line with this prior area of, redistribution. And therefore we noted that this may be an area which price comes up into before selling off. And this is kind of what we are seeing now, with price now moving along and breaking across that trend line, which was representing that kind of slow growth to the upside. But now we're seeing this kind of consolidation take place on that area of liquidity. And remember, we noted this area is not even a very strong area of resistance. And so seeing price come into contact with it, seeing price struggle, in reacting with it, is kind of hinting to us, very bearish sentiment in relation to the US 30. Now, obviously, this is following also the analysis that we did do on the RSI, where we did note a bearish divergence, with this coming in line with the weakening bullish momentum on the charts. And therefore we started to frame a picture that quite possibly the US 30 was preparing for a dip to the downside, and that possibility still remains, with price, until price does break kind of above that that area of liquidity and resistance in a significant way, we could be expecting a rollover to the downside, which is why we need to keep our eyes on the US 30. But next to talk about is the dollar, of course, following up on the article that we spoke about just earlier. The dollar is continuing that push to the downside, and if we just take our cursor here, we can line it up with where price reached yesterday in relation to its historical levels. So price reached levels not seen since August of 2023 on the Friday the 11th. Now, this is very significant moves to the downside, and as we can see here, following that US inflation data release around the 13th of November, we have seen that continued sell-off for the dollar, and just price moving further and further to the downside. And so it'll be interesting to see where price can now go for the dollar, as it has kind of broken below that most recent prior low and is now just pushing to the downside, and has broken past this kind of bearish Fibonacci extension level. So keep your eyes on this. Next, talk about, though, still on the topic of the dollar, but euro dollar, of course, to note, which has broken past its most recent highs. Now, we had kind of provided and noted some kind of wariness for how far the euro dollar could be continuing to push the upside, as we had seen kind of this strong bullish momentum, and we were kind of expecting a bit of a retracement, but it does seem that price was not able to do that, with too much bullish momentum for the euro being on the upside, with price now breaking above its most recent highs and pushing towards that Fibonacci extension level around the 1.105 level. So keep your eyes on euro dollar. Next talk about though is pound yen, which we had noted did struggle to break above its most recent high, but did break above it. However, we did know after that although a new high had been made on the RSI, we were seeing that bearish divergence form, and we've seen this a lot on many different charts and pairs at the moment. So this is why it's something to take note of. Now, this could be hinting to us, a further continuation to the downside, as most recently we have seen that extreme bullish momentum for pound yen, and this price action that we're now seeing is more so representing a kind of price action of ranging, where we're forming that kind of resistance at the top near around the 188.5 level, and we could be forming a bottom around that 185 level as well, and therefore we might just see price range around this area. So keep your eyes on pound yen. Keeping on the topic of the yen though, dollar yen is something that's very interesting to talk about, as most recently, maybe over the last 2 months, we've had that extreme level of volatility, and as we can see here, that's very much still the case, with price coming up and testing this 50% Fibonacci level that we had noted on the charts and selling off after testing it a few times, and now we could be expecting price to break below this strong area of liquidity, but of course we need to see and wait and see how that this occurs, as price could react quite greatly to this level, which is likely to contain lots of buy orders, so keep your eyes on this. Next talk about though is Bitcoin, which has now broken above the clear kind of resistance level on the range that we have been seeing Bitcoin bounce around in. That said, we could be seeing once again another false breakout, as we did see on Friday the 24th of November, as Bitcoin has been ranging around this level since near the start of November, now around the 9th of November, and therefore it wouldn't be a surprise to see price sell off once again and return to levels around the 36,000 level. So keep your eyes on this. Lastly to talk about on the charts though is gold, of course, which following the weak news for the dollar today, following his rhetoric, Waller's rhetoric in relation to rates being cut sooner than expected, and his positive rhetoric in relation to inflation, we have seen gold go up dramatically, with this also being helped by, of course, the escalations to world tensions in relation to Finland closing all land borders. We have seen that overwhelming bullish momentum to the upside. Now, when we were talking yesterday, we were noting how price was struggling around this area of resistance, near around the $2,000 an ounce level. But now, following that most recent fundamental news, we have seen that extremely powerful movement to the upside, strong momentum to the upside, and we've now pushed price all the way up until the 2040 levels, which would be coming in line with all-time highs nearly. Now, as for areas of resistance, we could note this area, which has acted as resistance before, and kind of price has tapped into it. But I think this is kind of a process of wait and see, as price has now pushed into that area. Do we see that sell off from that area? If so, where can we get in on price for a continuation to the upside? In the long term though, price did bounce off that 38.2% Fibonacci area around the 10th and 13th of November, and therefore if we're looking on the Fibonacci retracement tool, the area which price could run all the way up to is around that 2064 level, where the Fibonacci extension level is laying, and so price could make a significant run up to there most certainly, but we could be expecting a retracement in the short term, so keep your eyes on this. But that's all to talk about on the charts. Lastly to talk about, of course, is the economic calendar and what's coming up tomorrow. Now, firstly, we will have Aussie inflation data coming out today, so make sure you listen out for that. As well as that, we do have an ECB's non-monetary policy meeting taking place, As well as that, we will have Spanish inflation rate figures being released, as well as their business confidence figure coming out with that. As well as that, we do have Italian business confidence and consumer confidence figures being released. And most importantly, out of all the European economies, of course, we do have the ECB consumer confidence figure, an economic sentiment figure, and industrial sentiment figure all being released today. So make sure you listen out for all of them to make sure you have a good understanding of what's going on with the euro. As well as that, we will have German inflation rate. That is very, very important. Of course, inflation's been coming down now worldwide, and historic, and in the last month we did see inflation kind of come under most economists expectations, and with the ECB we're kind of looking to see when the ECB might start cutting rates, and understanding the ECB's inflation rate, and Germany being the most important economy of all of those Eurozone economies, it's important to understand where Germany is at with its inflation. As well as that, we will have US GDP growth rate figures being released, as well as numerous Fed officials' speeches today. But that GDP figure is very important, of course, considering that rhetoric that we were hearing from Waller around growth now slowing down. So listen out for that. And finally, we will have Japanese retail sales data and industrial production figures being released. So listen out for all of them. But that's all from us at Wildwood Capital. We've covered a lot on the articles, lots on the charts, and lots on the economic calendar. I hope you have a great trading day. But that's all from us at Wildwood Capital. See you later.